Crypto has been on fire lately, and 2024 felt like the ultimate victory lap. Bitcoin smashed through 100K, the crypto war in the US is over, and believe it or not, a crypto enthusiast now sits in the Oval Office. Yes, you heard that right. The man ran on a pro-crypto platform and he delivered. And if that wasn't enough, Donald Trump just signed an executive order about crypto, but not quite what everyone hoped for. He's created a working group to research a National Digital Asset Stockpile. This initiative aimed to build a reserve of strategic digital assets, potentially including cryptocurrencies to bolster the US economy and ensure leadership in global digital economy. Think of it as a backup vault of key digital tokens for emergencies or future economy strategies. However, what's still missing in the big move? A Bitcoin strategic reserve. This would mean holding Bitcoin as a national asset, similar to how countries hold gold reserves, solidifying Bitcoin as a key player in national and global influence. With all these bullish vibes, I can't help but wonder, are we riding the wave to the moon, or are we approaching the end of this cycle? Hi, my name is Lamia, and before we get caught in the euphoria, let's take a step back and figure out what's really happening. Let's start with a recap of 2024. Last year was wild. Bitcoin more than doubled in price, smashing six-figure for the first time. Spot Bitcoin ETFs launched in January and gobbled over 100 billion worth of BTC. MicroStrategy doubled down on its holding and even made its way onto the Nasdaq index. And Gary Gensler, he resigned as he knew he would be fired on day one, as Donald Trump had promised. That's a wrap on Washington crypto crackdown. Meanwhile, Russia ramped up its use of Bitcoin for international trade, and governments worldwide start talking about Bitcoin as a strategic reserve. XRP proved its critics wrong, jumping 5x in just over a month and overtaking USDT as the third largest crypto by market cap. And now, as we step into 2025, the vibe couldn't be more bullish. But is this sustainable, or are we nearing the peak of the cycle? So what defines the end of a cycle? The end of a cycle often considered with shifting market behavior rather than just price action. For crypto, it's not just about the chart, it's about the fundamentals and external pressures. Cycles can end when liquidity dries up, investor sentiments flip, or microeconomics forces start applying pressure. These shifts can occur gradually or in response to sudden events like regulatory changes, economic instability, or institutional pivots. So what's crucial to watch for are signs of declining enthusiasm among major players. For instance, institutions pausing purchases, whales reducing their holding, or government introducing policies that complicated adoption. In parallel, technical signs like decline in trading volume, shrinking open interest in derivatives, or failure to break major resistance level can signal that momentum is running out. And like traditional market, crypto cycles also tend to react heavily to news and speculation, making narrative shifts crucial to watch. The market today, Bitcoin at 100K, is a big psychological milestone, but opinions are split. Some believe it's just the beginning of a monster bull run, fueled by fundamentals like the pro-crypto US government, Wall Street's newfound love for Bitcoin, and global instability eroding trust in fiat currency. Others argued that this milestone is the start of a cool down phase, an early signal of the end of the cycle. If BTC breaks past 160K or even 200K in 2025, we might officially enter speculative territory. But for now, price still seems tethered to strong fundamentals. Sentiment though, that's where it gets dicey. Signs of end of cycle. This time is different. These four words are often shared at the peak of the market cycle. It's the conviction that things will only go up forever. And honestly, some of this energy is in the air. Take MicroStrategy for example. They doubled their BTC holding in 2024, leveraging up as price soared. That's bold, sure, but it's also risky. If the price drops, they're in trouble. And let's not forget the absurd price prediction floating around. Some analysts are now calling for BTC hit 400K, while others are throwing around numbers as high as 800K. Irrational exuberance. You decide. Another hallmark of a cycle peak is the flood of new participants. But surprisingly, trading volume are lower than in previous cycle, and social media engagement with crypto has also dipped. Bitcoin Wikipedia page views spikes after the 100K milestone, but remains far below 2022 level. It's like the market is growing without the hype. So are we at the end of the cycle? Here's the deal. Sentiment feels speculative, the optimism through the roof, and bold predictions are everywhere. But price, trading volume, and social matrices tell a different story. Without a rush of new buyers or excessive leverage across the board, it's hard to call this a true peak. That said, if Bitcoin rocketed past 200K, we'll need to reevaluate. For now, it looks like the market has plenty of room to grow. But let's not forget, cycles end and corrections happen. Stay cautious, stay informed, and don't get caught up in the hype. What do you think? Is this just the beginning, or are we heading for a cool down? Let me know your hottest take in the comment below. Don't forget to like, subscribe, and hit that notification bell so you don't miss out on the next deep dive. And remember, this isn't financial advice, it's just a guide to help you navigate the wild world of crypto. See you in the next one.